So when are home loan interest rates supposed to come back down? That's a question that I get almost every day in speaking with my real estate agent partners and other lenders as well that are newer to the industry. And really just kind of expressing the difficulty that people are having with the slowdown in the general real estate market. We're not seeing as many people at open houses. We're not seeing as many offers coming in. Our sellers are not willing to bring down their expected sales price. Interest rates continue to rise. Affordability is getting more out of reach. So when is this going to turn around? So I'm going to go through this here and show you the actual charts and statistics as to why we believe interest rates are going to come down in the future, when that is, and then also what might get in the way of that actually happening. Before I jump in, make sure that you do like, subscribe, and share to the YouTube channel, because this is where we're able to put more information out there a little bit longer than just the Brent Bruce Daily. All right. So this is the Brent Bruce Daily for September the 14th, 2022. It is 6:04 p.m. Central Time, which is much later in the day than I would usually put this out. But quite honestly, I've been having conversations with real estate agent partners most of the day over this topic. So let's take a look and really see what's going on. First of all, let's take a look at our interest rates as of today. So yesterday we know was a terrible day in the interest rate market. The stock market, the Dow Jones lost, I believe it was 1,275 points. Very difficult day because of our CPI report that came out, the Consumer Price Index. That is what we're going to look at today, because that is going to tell the story of the future. So let's take a look where we are now. Fortunately, we have had a little bit of a balancing in the mortgage-backed security market. We're up 9, and the 10-year is down 2. So that's a little bit of a rebound from the difficulties of yesterday. You see that we broke way down yesterday and bounced off of this lower Fibonacci level of support, ended up kind of up in this range here. Today, we're up a little bit now that the market has closed, because it is, again, 6:05 p.m. Central Time, so the market is closed. So we had a little bit of an improvement in the day. We talked about knee-jerk reactions by the banks. So what does that look like as far as our interest rate? Well, let's take a look at the Brent Bruce Daily scenario before we get into what we expect for the future. So we're going to view the Brent Bruce Daily, which is our very well-qualified conventional 30-year fixed mortgage. We are sitting at 5.99, which, man, we will take that, because yesterday, remember, we were at 6.25. So you see how the banks were moving far in one direction because they were seeing the mortgage-backed security get beat up, and they want to get in front of that damage. So now that the damage has kind of calmed down a little bit, they gave some back, and we were at 5.999 with a little bit of a credit of $853. So we will definitely take that. Make sure that we're compliant here. I have to do this here is show you just briefly what this scenario is broken down by. Okay, so what do we expect for home loan interest rates? What's going to happen that's going to bring them back down? Okay, the big thing that we need to understand is the way that the Consumer Price Index is measured. So we're going to take a look at that here, and we have to look at some of the historical numbers in order to know what to expect for the future. We can kind of look into the future, and the Consumer Price Index is a major indicator and a major calculation that is considered for inflation. If you don't watch the Brent Bruce Daily, you need to go back and watch this to understand what I'm about to tell you. Inflation is what moves home loan interest rates most of the time, but at least it's the most impactful. And that is entirely what is moving home loan interest rates at this point in 2022. So let's take a look at the Consumer Price Index report that we received yesterday. Let me get you over there here. So this is the CPI report that we received yesterday. And we're going to mainly be looking at the core consumer price index. The core consumer price index excludes the calculations of food and energy. So gasoline, natural gas, things like that are removed, but also food. Okay, and I want to make sure you understand that food actually went up as far as the inflation number. So gasoline and fuel, energy, was really the reason that we had some improvement to the headline number. Okay, so we weren't as bad as we thought the headline number was going to be. But the core number did go up. It was at 0.6 versus 0.3 was the estimate. And these are big numbers. I'm going to show you why in just a moment. And this is how we're going to dictate when home loan interest rates are going to come back down. So hang on with me. So it was up 0.6 instead of 0.3. That is why the markets reacted the way that they did. The core number, because they're smarter. than most. They're reading through the fact that the headline number was dramatically influenced by gasoline prices being lower than they were the month before. But gasoline prices were only lower because of the federal government releasing fuel from the strategic oil reserves. So they were using their savings account of oil to try to bring oil prices down, which did reflect in the headline number of the consumer price index, but is not considered in the core number. So the core number went up to 6.3% year over year from 5.9%. Okay. So that's basically telling you that inflation is hotter in the month of August than it was last year. And let me help you understand how that works. Now, what we want is we want the core consumer price index number to go down. We want that to come down. We want inflation to be reduced. That will allow home loan interest rates to come down as well, because home loan interest rates are what's called fixed assets. The return that you get on the bond that is a mortgage-backed security, and the mortgage-backed security is what actually home loan interest rates really are. The fixed rate is eroded by inflation. So if I'm going to give you a 4% rate of return on your money, but inflation is 8%, you're not happy. So what would I have to do to make you happy? I'd have to give you a rate of return that is either more than inflation or close to inflation. That's why home loan interest rates have come up, okay, because of inflation. So the question that we need to ask is, so when is the consumer price index going to come back down? And can we look into the future and know? Well, we can't know, but we can have a pretty good understanding. Okay, so let's take a look at how they calculate the year over year consumer price index. Each month they look at the month over month inflation number. Okay, so you can see in August of 2021 it was 0.2, September was 0.3, October was 0.6, okay, and so on and so on. And this is replaced each month. So the reason that the consumer price, the core number went up last month, year over year, is because, now check this out, this is the key. It is because the number came in at 0.6. And if you go back 12 months, we were kicking out August of 2021. So we were dropping this one, replacing it with this one. That would make a 12-month total aggregate. This is added together. Add all these numbers together, and that would give you 6.3. So because 0.6 is greater than 0.2, that's why the aggregate number went up. That's how this works. All right. So now, okay, well, then that means that what we need is we need to bring a new number in that is lower than the old number. So if in September, the new September number comes out right over here and it's 0.2, then that is lower than the number we're kicking out, which is 0.3. And the overall year over year consumer price index core number, which is what we're looking at, would go down. It would go from 6.3 to 6.2. Okay, so if you understand how that works, now we can look into the future. Okay, so what do we expect is going to happen September the 21st? September the 21st, the Federal Reserve is going to increase the federal funds rate by at least 0.75%, maybe more. Now, keep in mind, that doesn't mean that home loan interest rates are going to go up. In fact, home loan interest rates will probably go down because of that fact that they raise the federal funds rate in order to fight inflation. Because raising the federal funds rate should cause the consumer price index number to go down, because it should slow inflation by causing things to cost more in the economy. Okay, so making debt cost more, not things. So understand that when the consumer price index number goes down, home loan interest rates will go down. So what we need in September is for the number to come in at 0.2 or less on the month over month number. That's probably not going to happen. It's probably going to come in greater than 0.3. However, I don't think it'll be 0.6. it'll probably be 0.5 or 0.4. So the year over year consumer price index in September will probably go up. And the markets are not going to want to see that because that means inflation is still going up. But here is where we start to see some relief, okay? Because if we have a federal funds rate increase in September on September 21st, which we will, the next time the Federal Reserve is going to meet to raise interest rates, the federal funds rate will be in November. And they will probably raise the federal funds rate again by maybe a half or 0.75%, depending on what they're seeing in the numbers. As they do that, it will bring inflation down. It will fight inflation. So if in September, now we're going to have to look out into the future here. If in September we have a 0.4, then that means that the year over year number is going to be higher because we're replacing a 0.3 with a 0.4. But if in the next month, so that's September, so if in October of 2022, we had a 0.4, that is less than 0.6. And then you have a year over year number that is going down. And that is what the markets are going to want to see. So we need to start, right now we're replacing 0.2s and 0.3s, which are very low numbers. But soon through the fall and the winter, we're going to be replacing 0.6, 0.5, 0.6, 0.6, 0.5. Those are high numbers. So we're going to more easily be able to bring the core year over year inflation number down because we're replacing hot inflationary numbers of 2021 and the very beginning of 2022. And to give you a little bit more proof, when did home loan interest rates start to go up? When the Federal Reserve and the markets began to see those super high numbers coming in on these month over month numbers, year or month after month after month after, and they're going, shoot, inflation's out of control. And that's when home loan interest rates began to shoot up. Okay. So as the Federal Reserve does its work by raising the federal funds rate, we should start to see month over month numbers come in, not at 0.6, maybe at 0.4, 0.3, 0.2, maybe 0.1, even on the core number, because inflation will subside by raising the federal funds rate. And then you're going to see the year over year number come down considerably. That will allow home loan interest rates to come down because now they're not trying to compete with inflation rates of 6.3. When the inflation rate comes down to 4%, now the mortgage rate is competing with a 4% inflation rate. Now mortgage interest rates can be 4%. Like, look, what is the rate at right now? What is the home loan interest rate at right now? It's about 5.99, close to that 6.3. So if inflation gets back down to 4 or 3.5, home loan interest rates will be able to drift that direction as well. Okay? So that is what we're seeing. We're seeing that September is going to be difficult, but October, November, December, January, February, we should have a pretty good run at reducing the year over year core consumer price index, which is how home loan interest rates are going to come down. Now we're going to have a little bit of a blip here in March, unless the Federal Reserve has done a great job and overall month over month inflation readings are at 0.3 or below. I mean, man, if they get it at 0.3, we're good. We won't have an increase to the year over year number. We'll be stagnant for a month, but then boom, 0.6, 0.6, 0.7. This is when we're really going to be able to have a good run at bringing down the year over year consumer price index, and interest rates should come down considerably through the first half of 2023. And maybe we may start to see that even in the fourth quarter of 2022. Now, you can see why this should happen, and it should happen. But here's what we have to watch out for. We have to watch out for what we always have to watch out for is geopolitical issues. Okay, so geopolitically, a war, someone drops a bomb, someone is assassinated, anything that disturbs the markets that we were not anticipating. Okay, that's one thing we have to watch out for. The next thing is the actions of the federal government. So you guys have heard me say this many times, that on August the 16th of 2022, the federal government and Joe Biden signed into law the Inflation Reduction Act. The Inflation Reduction Act was completely the opposite. He just basically increased inflation overnight because of calling it something different in order to fund other projects that he wanted to fund. Okay, whatever, that's politics. But if that happens again, he is going to cause us to not enjoy the benefits of what the Federal Reserve is trying to do. The Federal Reserve is raising the federal funds rate to bring down inflation, but then the federal government on the other side injects $749 billion into the economy. You can't have both, right? So if we don't have anything come from the federal government that is just injecting capital, that's important, because if they do that, it will throw all these numbers off. The other thing that is a little bit of an outside problem that we need to be aware of is that inflation is being affected by wage-based inflation. Okay, so we need to stop raising everybody's wages. Otherwise, that is inflationary, and that's inflation that is irreversible. You cannot turn around wage-based inflation. So the last I heard, Social Security, the COLA, the cost of living increase to Social Security, is potentially going to be 10% from 22 to 23. Hey, I'm glad that they're going to get an increase of 10% to their income, because we all know that Social Security is not a bunch of money to live on, but that is tremendously inflationary, 10%. So if you're increasing wages by 10%, but you want inflation to go down, that doesn't meet up. So when employers continue to raise wages, basically because the employees are demanding it, and the employers give in to the employees' demands, then that causes inflation that is irreversible. And we didn't used to see that. Think about it. In history, people would make all kinds of noise about wanting increases to their pay, but would they ever see a 10% increase? I mean, if you watch my report again, a few weeks ago, I talked about the fact that people that changed jobs from one employer to the other employer over the last 12 months experienced on average an increase to their income of 16%. You cannot have low inflation with increases to wages of 16%. It's not going to happen. So those are the things we have to watch out for: wage-based inflation, geopolitical issues, and government, I don't want to say intervention, but infusion. Those things can throw us off. So if you're wondering when things are going to get better, when home loan interest rates are going to come down, these are the months that we should start to see that happen. October to June 2022 to 2023, we should see home loan interest rates come down. Make sure that you like, subscribe, and share this information. Share this information. Put it out to everyone. And also make sure that you watch the Brent Bruce Daily, because we talk about these things every day. We watch this. You're going to hear about the Consumer Price Index every day when it comes out. And we try to get that done in just a few minutes. This is a longer video, but I hope that this actually gives everyone a little bit of hope, vision into the future. Make sure that you set yourself up to be able to get through these few tough months, and also letting people know that interest rates will come down, and you're going to be looking like you really know what's going on as the Consumer Price Index numbers come in. We will keep you posted. We will always give you an update before the CPI comes out or any other type of events that change, and we're going to watch interest rates. Let's see if this plays out. Have a great one. Let me know your comments or thoughts, and I'll talk to you again soon.